What's going on, everybody? It's your boy C-Zar, and in this video we'll be talking about exiting the crypto markets. Not right now. We're not going to be exiting them right now. The best part is coming, okay? The best part hasn't even started yet. But when the best part gets here, when we are at that finale phase blow off top, there needs to be a plan for exiting the markets. And this video is inspired. Shout out to Sam Kemp for asking this question. I'm going to read a question that he wrote me a little while ago, and we're going to basically model this video off of this question because I think it's a well thought out question, and I think anybody investing in crypto stands to benefit from the answers that I'll give to this question. So I'm just going to read it, and as I go, I'm going to answer at various parts that I think need answers. Okay, so he says, "Hey dude, what's up, dude? What's up, Sam? I was wondering if you could make a video about the best practices for off-ramping gains." Right now, who am I to say that these are the best practices? What we're going to talk about. First off, not a financial advisor, not financial advice. But this is my 10th year in crypto. This is my third bull market, so I have a little bit of experience whenever it comes to dealing with cold storage wallets, hot wallets, on ramping, off ramping funds, on ramping funds and letting them go to zero, on ramping funds and getting a near 100x and off ramping those. Right, we've been through it all, man. And in the first cycle, we definitely hit zero a few times, but last cycle was really good for us, man. This cycle has been very good to us as well. And if you're like me and you're like Sam, you're probably going to make some life changing money between now and the next 6 months or so, whenever this bull market ends. Which nobody knows, but I'm expecting it ends in like March, April, May, somewhere in that kind of time frame. Um, but again, I'm getting caught up in the semantics here. The thought here that I'm trying to share is that I do not know the best practices, and everybody is going to have their own form of what is best for them, right? For example, somebody who has $1 billion versus somebody who has $1,000, there's going to be different methods of approach for off ramping your gains out of the crypto markets, right? With the gains some of us are forecasting, some of us may see numbers well above six figures. Yes, probably, yeah. And personally, I have a ton of questions about how to safely get that money from a cold wallet into a bank account. So my thoughts here, Sam, and my thoughts to a lot of you guys who are watching this video right now, if you're dealing with money that is large, so, six figures, seven figures, eight figures, or more, and you're trying to get that off of the exchanges at some point. That's your plan, is to get it off the exchanges. My thought is you probably shouldn't have it in cold storage. It's not that you shouldn't have it in cold storage. You can. That does add more safety, that's for sure. But if you trust the exchanges, depending on where you are in the world, if you trust your exchange, Binance is very reputable. Coinbase is very reputable. KuCoin is very reputable. Bybit, Kraken, Gemini, even crypto.com, Robinhood. There's all kinds of reputable exchanges. A lot of people, and the true essence of crypto, I want to be clear because I got into crypto because of the true essence of crypto, but I'm also realistic, all right? The true essence of crypto is screw the exchanges, F the exchanges, F the man. I'm going to take my money, I'm going to keep it off the exchanges, and once the world is ready to use crypto, then I can use it then, right? And that's great. And I think that there should always be a portion, and who cares what I think? Again, not a financial advisor, but I think there should always be a portion of long-term storage crypto. Now, should that just be in any random crypto? No, that should be, that's your Bitcoin, that's your Ethereum, your Solanas, your XRPs, your Bitcoin Cashes, your Moneros, XMRs, Zcash now, right? These are cryptos that are expected to have life and longevity besides just this cycle. If you're holding cryptos that have longevity beyond just this cycle, cool, those are long-term storage. And they don't have to exclusively be long-term storage. You can take gains from there, but you should always have some. I think anybody in crypto, especially with life-changing funds, you should always have some form of long-term storage, long-term hodl bags at your disposal. That's my thoughts. If you are looking to, let's just say, for an example, let's make a made-up scenario here. Let's say you had $10,000 and you 100x that money. You turned it into $1 million by the end of this cycle, and you're trying to offload that, right? The average exchange, to my knowledge, I want to say it allows you to off ramp, and it depends on your level of KYC compliance and your level of approval. But I'm pretty sure you can get like $50,000 a day off the exchanges, maybe even more, depending on your level, right? If you've got more capital, they'll allow you to take off more, but you have to go through various verification processes. But I think for the average person, it's like $50,000. Let's say you have a basic verification phase, and you're able to get $50,000 off of an exchange per day, or maybe it's per week. I don't know. It depends. And during high traffic times, you're probably going to have a moment where that's not coming in, right? Because everybody's withdrawing at the same time. Um, $50,000 times 10 is 500,000 times 20 is 1 million. So it'll take you effectively a month to offload those funds from an exchange at a $50,000 withdrawal limit per day. If it's 50,000 per week, it's going to take you 20 weeks, right? That's a long time to withdraw that money. On the bright side, I don't think any of us necessarily need to spend more than $50,000 a day or $50,000 a week, but maybe you have demands, maybe you have requirements, purchases that you're trying to make, business plans, whatever, and you need that money, you need it now. It's your money, I get it. But again, if your whole purpose is withdrawing large sums of funds off of the exchanges, I don't think you should be in cold storage at all. Maybe not at all, but a portion of what you're planning to withdraw should be on an exchange, because why send it to cold storage to keep it safe whenever the exchanges will keep it safe too? They will. I know that's not the essence of crypto that people like to hear, but the exchanges, the reputable ones at least, they'll keep your funds safe, at least in a U.S. dollar valuation, right? And if you're going to send it, if you're going to send $1 million or millions of dollars or hundreds of thousands of dollars even from your exchange to a cold storage wallet, that costs a little bit in fees, right? It's not much, but it costs a little bit in fees, and depending on what method you use, those fees can get expensive. And whenever you send it back, especially in high traffic hours, it could cost you more fees. So screw that. If you're going to withdraw it from the exchange anyways, just keep it on the exchange. There's nothing wrong with that, right? There's nothing wrong with that at all. And you won't hear many people say that in crypto. They say not your keys, not your Bitcoin, and of course that's true. But if you're planning long-term storage, that's different. What we're talking about here is withdrawing. If you're planning on withdrawing, I don't think cold storage is necessary. I think there's nothing wrong with having your funds on the exchange. Okay. Number two, and in essence of the same thing, it might be valuable then to have multiple exchanges to access, right? Maybe instead of just having Coinbase, maybe instead of just having Kraken, have Coinbase and Kraken and Gemini and Crypto.com and Robinhood and Binance and KuCoin. And then the withdrawal limitations daily, you can take from your cold storage or whatever, you can send, you can allocate now into each of these exchanges. Let's say you're just holding Bitcoin and you have $100,000, or let's say you have $1 million in Bitcoin, and by the end of this cycle it'll be worth $5 million. Let's say Bitcoin goes to $500,000, it'll be worth $5 million. If you could allocate a quarter of that or a fifth of that to 5 different exchanges, then whenever it is time to withdraw, you're able to hit that withdrawal limit on the maximum for each exchange too. Like that's fine. I want to move on because this is just the first part of this question. Okay. So I hope that helps, right? Whenever you're talking about getting it into a bank account, you're not going to get your funds into a bank account from a cold storage wallet. I mean, maybe. I don't know of any banks that accept USDT or USDC and they'll transfer it into cash. That might come next. I mean, with all this stuff, maybe that'll come next, and maybe the best plan of approach is really to just keep it in cold storage. If there are banks that literally transfer crypto USDTs or Bitcoins into hard cash US dollars, then screw the exchanges. Yeah, we don't need them at all. That'd actually be a really good way to undermine the exchanges. If banks were able to transfer cryptos into U.S. dollars, that'd be a really good way to do it. Shout out to any banks who are looking for a new business model. Anyways, I've got plenty of ideas. Anyways, I don't know the legalities of all of it though. You say, is it best to swap into a stable coin within the cold wallet? And he gave me an example of the cold wallet, or send directly to a centralized exchange like Coinbase or Kraken. I like to swap whenever I'm sending things. I like to swap into colds. I like to swap into stable coins, because I feel like stable coins, when you're sending them from place to place, they are cheaper versus like Bitcoin, for example, or Ethereum, for example. Depending on, if it's Solana, if it's something that's got a cheaper transaction fee, it might not matter. You know what I mean? But definitely look whenever you're swapping, especially large, and not just swapping, but sending transactions. Look for the cheapest method to do this, because things can get expensive whenever you're dealing with these high numbers. And $100 here or there, $1,000 here or there might not seem a lot whenever you're dealing with 7 figures or more, but it adds up, and that's your money. You don't need to be given. You would be pissed even if you're a millionaire or multimillionaire. You'd be pissed if you lost $100 or $1,000 and it was in your pocket and it flew out, right? Like don't do the same thing with these fees and these swaps. As far as it goes, it depends. It depends, Simon. That's not a great answer for you, but I personally do like to swap into stable coins before I send anything. I personally do. That is what I like to do. My thoughts here, the only thing that I would say is that if you are planning on basically going from cold storage to an exchange so that you can then withdraw to a bank, right? Because there's no banks that just accept cold stored cryptos and transfer them into dollars. But if there are, then this step becomes unnecessary. But until that time, you send your funds to the exchange. Maybe just keep them on the exchange to begin with. If you're going to withdraw them to the bank account, you'll have to use that withdrawal limit. But why not also, just a thought here, not financial advice, not a financial advisor, why not treat the exchange almost like a bank account? Because it effectively is. You can store your USDC or USDT or whatever stablecoin on various exchanges and get an APY back on that on those stored funds. So let's say you have $1 million or $7 million in Coinbase. Let's say you have that same amount in Robinhood. Let's say you have that same amount in a bank account. Which one of those accounts is going to give you the most return on what your net worth is per year? It's going to be Coinbase or Robinhood. They're going to give you more yield. And you can use, Coinbase has a card. You can use a Coinbase card, a debit card, a credit card, to pay for transactions using your crypto funds. You can do the same thing with Robinhood. The exchanges are effectively banks if you make them out to be. And we're going to get into this because he talks about KYC and stuff too. You do have to be KYC compliant though, right? You can't be anonymous with this kind of stuff. If you're trying to promote anonymity, because he asks about this too. If you want to be, let's say you have 7 figures and you want to withdraw that anonymously because you don't want anyone to know your wealth, and that's your privacy, that's your rights to do. Not for nefarious reasons, but just because you don't want people to be up in your business and know how much money you have. I get it. I respect it. I understand. Okay. To take money from cold storage and put it into your bank account without any kind of KYC at all, oh man, that you're gonna have to go through over-the-counter exchanges, right? Not like an exchange, but like somebody who will pay you, will deposit money into your bank account. You give them your ledger or your key phrase or whatever, that you transfer those funds to them. It's a different, that'd be a whole different thing. You have to know people for that, right? And maybe we can get to know people, but that's a little bit more of a pain in the ass. The reality is, and even then, if you're going to get $1 million or more, 6 figures or more deposited into your bank account out of thin air, that is going to be traceable. The banks report that to the IRS or whatever tax agency. I don't know if you're in America, Sam, but they do report that information. So if you're talking about withdrawing to a bank account or for using that money in the real world at all, you're likely, unless you're just spending that crypto at places that accept crypto, you will likely have some kind of KYC requirement. Absolutely. So the next part here is, what are the KYC implications for both, right? So I think I actually just went over that. Is a centralized exchange going to immediately freeze your account for sending 150K to it after only buying 10K of crypto? By the way, good job if that's the example. If you're lowballing me, even better job. Good job. No, they're not going to. No. You can, and just from personal experience, you could definitely take funds that are as low as 10K and deposit back over $100,000, and they're not going to freeze your account. No. And I don't know, I have pretty high verification status on Coinbase and on Robinhood and various other exchanges. I don't know how it is for every level, but I would recommend, why not, if you're using these exchanges, why not have higher levels of verification? Yes, privacy, all that stuff. But man, if it's just easier, if you're verified, it really is easier. And if you're dealing with a lot of money, you don't want money to be a pain in your ass. You're just trying to deposit it, make it easy, verify yourself, get validated, get to those higher tiers so that you can withdraw more money too at once. Your withdrawal limits go up. What are the KYC implications for both? Here's my thoughts, okay? Because here's a thought that came up with this, Sam. If you're depositing money on, let's say you're an American, okay? You're a United States citizen, or maybe you're a citizen of any country that Binance doesn't allow you to trade, or KuCoin doesn't allow you to trade, or Bybit doesn't allow you to trade, but you're using a VPN, or you're not KYC compliant, you've left out some of that stuff that's necessary for higher tiers, right? If you're using these larger exchanges, but you're a citizen of a country that they don't allow, my advice would be this, and not financial advice, not a financial advisor, but don't use those exchanges, okay? Binance, Bybit, KuCoin, if they find out that your account is owned by you, if they find out that you're an American or a citizen of a country that they're not allowed to do business with for regulatory purposes, they are entitled. They have the legal right to freeze and withhold, as in take away, your assets. Okay, so let's say you're in America and you're trading coins that are available on Binance, but you're not trading coins that are available on Coinbase, and you don't, or maybe you're using MEXC or something that doesn't have full KYC compliance. I don't know. I don't use Binance or Bybit because I'm pretty sure you do need KYC compliance to use them. But let's say you figured out a work around that. If they find out that you're American, or they find out that you're somebody from a country that they don't allow business with for legal regulatory purposes, they will literally freeze your account. If they find out, it's not that they will find out, but if you're putting large amounts of money in, they might look that up, because what an easy way it is for them to make money. Oh, somebody just deposited 7 figures. Let's see. Are they from the United States? Oh, yes, they are. Frozen. Frozen. Why'd they freeze you? Because they're saving their own asses, and now they're making millions of dollars by doing it. Right? It's not that hard. Don't so if you have a lot of money, if you're using Coinbase or Robinhood or some kind of exchange, because you can send funds to Robinhood now, and you can withdraw and send funds, I'm pretty sure, to Robinhood with crypto. I know you can at least send funds from Robinhood. I don't know if you can send it back to Robinhood, but I would think you can. If you're using those exchanges and you're an American citizen, you're fine, but you will have to have some kind of KYC implementations there to withdraw. If you have no KYC or very low KYC requirements met on these exchanges, your withdrawal limits are going to be lesser. So just up those, do whatever you can to get higher verification levels. In my opinion, it's going to be useful. It won't be not useful. That's for damn sure. Let's see. He says, is a centralized exchange going to immediately freeze your account for sending 150K to it after only buying 10K of crypto? No, I that's never happened. I've never heard of that happening. I would think that's weird, unless specifically in the circumstance like you were using KuCoin and then you sent a large sum of money. They might freeze that to verify that you're somebody that they can do business with, and it might be to protect their own asses, or it might be just a cheap way to make money. But that's just the world that we live in. Okay, let's see, or is it an unusually large swap going to trigger KYC and potentially lead to loss of funds? Maybe. Maybe. I wouldn't say a loss of funds, but a withholding of funds. And depending on what exchange you use, it could be a loss of funds. It's not that Binance or KuCoin or Bybit is more sketchy than Coinbase. It's that if you're American or you're in a country that they don't do business with, they're not allowed to do business with, they have the authority, they have the right to freeze your account and withhold your assets to protect their own asses. They have so depending on what exchange you're situated. I hope that I'm making this part clear. I don't know how else to say it, but I'm getting hung up on this. I'd like to move on. He finishes off by saying, would this even lead to a double taxation? Thanks for all your videos, bro. I appreciate you, Sam. Thank you very much. I appreciate all of you guys. Thank you all. By the way, thank you all for being here, hitting the like button, subscribing. Thank you for your continued support. I want to answer this last question because I think there's actually a lot here to go off of, okay? Talking about double taxation. I am not a crypto tax guy. I do not know everything whenever it comes to taxes. To my knowledge, there's a couple things I want to say. To my knowledge, the U.S. is providing regulatory clarification as far as taxation framework goes for cryptocurrency. When the government shut down, the first hearing, the first meeting that the Senate had after the shutdown happened was specifically about the taxation of digital assets. So we're going to have that clarity provided, okay? But to my knowledge, and again, I'm not a tax guy. I'm not saying this is the truth. This is just from what I know. And what I believe to know is true. I'm not 100% sure. Check yourself. But if you swap from one crypto to another, I'm pretty sure that's not a taxable event. A lot of people will say that is a taxable event, pay the taxes, but the reason they say that is so that they just cover their asses, because nobody really knows. It's like a gray area. To my knowledge, no, it's not a requirement. It's always best to pay taxes and just be safe anyways, because the worst that's going to happen is you just get a return on that, right? You didn't need to pay it or whatever. The best that's going to happen is you did need to pay that double tax event, and now you've covered your ass. But if you're swapping from crypto to crypto, I'm fairly positive that's actually not a taxable event. I'm fairly positive. Like, let's say you're swapping from Bitcoin to Bitcoin Cash, or Bitcoin to technically even USDT, because that's a cryptocurrency. That's not a taxable event. It's a taxable event once you transfer that to US dollars. So in this case, Sam, swapping is actually very valuable. Swapping from crypto to crypto is very valuable. Where if you sell your Bitcoin for US dollars and then you use those US dollars to buy other cryptos, that's actually that is a taxable event. And it won't be double taxable, right? We're not taxed on the purchase of cryptos. We're just taxed on the sell of cryptos, and the sale only if you have gains. And on that note too, if you have losses, this is really important, because everybody in crypto, I don't care if you're making money in crypto, everybody in crypto has losses. Everybody is. We're net positive this cycle, right? and we still have losses to claim. There are, and that's the thing, the losses that you claim are easier to claim than the gains, because sometimes you're claiming losses and then you buy something and then those losses go away. You're actually in the green, but you haven't claimed those gains yet. So depending on the way you do taxes, or the way that the tax year, the fiscal year is set up for you, you can really mitigate your time frame as far as when to pay. Like, let's say that I have $1 million in gains right now this cycle. Okay, let's say that's what I had, $1 million in gains. Um, if I sold before the 31st of December, I'd have to pay taxes by April, right? That's tax day by that deadline. But if I sell in January, then I don't have to pay taxes for another year, right? Or if I sell after, I don't have to pay taxes for another time. This is also why I think the crypto market's going to extend into 2026 for tax purposes specifically. For the wealthy, they'll have more time to pay it off. Secondly, if you've sold any cryptos, if you've made any transactions this year, or this year specifically for this fiscal year, whenever you sell, if you've sold for a loss, you still have claimed those losses this year. So you can actually in this weird kind of scenario, especially with crypto, because there's no wash trading rule, you could have gains to claim by the end of this year, but you haven't sold, so you're not claiming those gains, and still technically overall claim losses. Like me this year, the way that I've done it, I actually have more losses to claim than gains, because the ones that I have gains on, I haven't sold. I haven't claimed gains on, but I have moved things around and taken losses. I actually have a lot of losses to claim. I'm actually, as far as like the government's concerned, I'm in the red this year. You know what I mean? But that's because I have unclaimed gains. So, as far as that goes, I don't think that it'll. I don't think that swapping will lead to a double taxation event, but good rule of thumb, because again, I'm not a tax guy, I don't know everything, and I'm learning, and I think we all are learning, and on top of that, there's not even proper regulatory framework for the taxation of crypto. Good rule of thumb, try to minimize the amount of transactions, the amount of swaps. Try to be grounded in what cryptos you're trying to hold, you're trying to sell, and when you're trying to sell them, right? Try to have conviction. If you're moving funds around and you're trading, that's fine too. Keep track of that stuff, but it's probably best, especially with the large stuff, to try and just keep it as minimal as possible. And I don't think swapping, let's say you had $1 million in Bitcoin, and you swapped that for USDT, and then you withdrew that USDT, I don't think that's a double taxable event. No, because the general rule of thumb is just, what are your capital gains, right? Did you have $100,000 and you turn it into $15 million? You're going to pay taxes on $14.9 million, right? You're going to pay taxes on those capital gains. You're not going to pay taxes on that twice just because you swapped from Bitcoin to USDT and then sold that USDT for US dollars in your bank account. I don't think you'll be taxed twice. Don't pay those taxes twice. But again, not financial advice, not a financial advisor, not a tax advisor either. Do your own research and find maybe someone, an expert. I think having a tax person is great, by the way, guys. If you get it, especially whenever it comes to large funds, maybe some of you have never used a tax person before. And for crypto specifically, it's not the easiest to find people who are willing to do that kind of stuff, but it's getting easier. It's becoming, because people are aware that this is a thing. There are crypto tax professionals now that exist in the world. So, make sure you're not getting ripped off. Make sure that they have good reviews, because a lot of people are shady, especially in these niche sectors. But tax people are great, man. Have somebody to help you with your taxes. I think that's great. But all in all, closing thoughts in this just great line of questioning from Sam. I would say if you're planning on withdrawing your money and putting it in your bank account by the end of the cycle, there's no need for cold storage. If you're planning on holding crypto for the long term until the world accepts crypto as a forms of day-to-day transactions, then have some in cold storage always. Why withdraw it at all, right? There's nothing wrong with having both. Me personally, what I'm going to do, and this is what I'm going to do, I'm not telling you guys to do this, but what I'm going to do is I'm going to use my multiple exchanges, so that I have higher withdrawal limits, right? Let's say I had a 50K withdrawal limit on Coinbase, Robinhood, and Kraken. Well, now my daily withdrawal limit's 150K, right? Let's say it's higher than that if you have higher verification, or lower than that if you have lower verification. You up your withdrawal. And not only that, multiple points of failure. Let's say one account gets hacked or is down for maintenance, you can't use it that day, you get hacked, you get your stuff stolen from. Having multiple exchanges will allow you to have multiple points of fail-safe security. Okay, so definitely multiple exchanges. I would have my funds in USDC or USDT on multiple exchanges, and I'd be staking them for whatever gives me the highest APR or APY, and then I'd use those exchanges effectively as bank accounts instead of my bank account. That's personally what I'm going to do personally. And I will have long-term storage. I will have Bitcoin, Bitcoin Cash, maybe some Monero, maybe some BNB for the long term that I'm going to store, that I won't touch. That, you know, during the bull market, I will move it there, and I know it's going to go down, but I don't care. It's just going to sit there for years. I'm never touching it. It's never coming out of cold storage. It's going to stay there and only be added to. That's what I'm doing. So I hope this provides some clarity. I really do appreciate the question. I appreciate all of you for watching this video. Again, and I want to be clear, if I'm wrong on any of this stuff as far as legalities go or taxation goes, it's not my intention to be wrong. This is just from the best of my knowledge, from my 10 years in this space. And to my knowledge, I haven't said anything that is wrong. I'm not trying to mislead people. I'm not trying to tell people to do anything that is illegal or improper, to implicate themselves in any kind of financial situation. I am just genuinely trying to provide my insight and my opinion based off my own experience. And if I'm wrong, that's my own fault for having negligence. But I'd like to think that I'm pretty learned in this realm of thought, at least. So I don't have anything else for you guys. I hope you got something to take away from that. And whenever it comes to taking away, by the way, one last finishing thought. I should have led with this. When you have a lot of money, whenever you're dealing with millions of dollars, you can market sell. You can do your market sells if you want, but I think the best, and who cares what I think, but the best form of approach might be to DCA out, right? DCA out, little bits at a time here and there, DCA out. Even selling before you think the top is in, selling after you think the top is in, whatever, DCA out. You DCA it into the markets, DCA out, right? That way. But if you want to market sell, go for that too. You'll just have a higher impact with more money like that. It just depends, right? $1 million market sell on Bitcoin might not hit the same as like $1 million market sell on I don't know, Pepe or some kind of lower cap coin. But nothing wrong with DCAing out, right? Try not to. It's okay to do large sums at once, but try not to do the whole sum all at once, right? Because you'll probably make more if you DCA out. But that's just my thoughts. That's what I'm gonna do. So I got nothing else. Hit the like button, subscribe. Thank you all for being here. I'll see you on the next one. Take care of yourselves. All right. Bye bye.